Let's go across to our next guest then. Nischal Maheshwari of Edelweiss Financial Services is with us. Nischal, hi, afternoon. How would you describe what's been taking place in the market for last couple of days, Friday and Monday? Friday there was a fear that there would have been large scale FIs selling, but the numbers didn't corroborate that. There was just about 500 crore cash market selling. What do you think is really taking place? Who's selling? I mean, we're seeing big cracks now on the Nifty.
So as I see, basically, I think the institutional selling is not much actually. If you really look at it, FI's number, if you look at the stocks and the futures together, FIs was, I think, something less than 100 crore selling as far as FIs are concerned. Domestic institutions were net buyers. So I largely see that this is the domestic market sellout basically which is happening. And what could be the trigger? I think could be NSCL payout getting delayed. NSCL 5,400 crore, which is a large number. I think that's what I think is that number is getting pushed into the stock market now. That is what my feeling remains to be. I have nothing to corroborate on that basically, but there has been no other trigger for this kind of a sellout to happen. Because this is largely margin selling basically, which you see, which is happening right now. And I think people are generally, obviously rupee is not helping the matters. So I think the pressure continues.
What are you telling your trader clients for the moment? Are you seeing 5,200 as the next line in the sand at all?
Lata, yes, for a long time we have been holding on to 5,500 to 6,100, a broad range, which has got broken down now. But I think that was expected because my 5,500 on the lower range was in expectation of 5.5% GDP growth. I think that number now seems difficult to achieve, and we should be closer to somewhere around 5% or lower. So in that kind of a scenario with the rupee at 62, I think a 51 to 5,500 range is what now I believe would be the next zone where the broadest indices should trade. And in that kind of a scenario, I believe 5,200 is a definite possibility to happen.
Well, then if Sensex is now down 300 points, so in 2 days the Sensex has fallen more than 1,000 points, in fact approaching 1,100 point fall in 2 days. That's a lot of price damage that you have seen, big damage in market caps, and stocks like Sun Pharma are now beginning to fall. Nischal, that's my next question. Should we now start to see some pressure on some of the outperformers? Because so far pharma, IT, they have been spared. In fact, they have been going up quite a bit this year. Would you expect some selling to happen in some of the stocks like Lupin and Sun Pharma, which is taking place today? Could it be some FIs maybe bailing out of some of these outperforming stocks?
Yes, definitely if the pressure is coming from FIs, then FIs only hold those 10-15 stocks here in larger quantities, and the pressure would come in. Friday doesn't seem to tell you that the FIs are sellers in a big way, and that only gives me the comfort that if it is not FIs and the DIs which are selling, then this selling would be temporary. And whenever obviously the market was holding on and the economy was in a different direction altogether, so some amount of capitulation had to happen, which has happened. And but till the FIs become negative on the country, I wouldn't be, FIs and DIs are negative on the country, I wouldn't be much worried.
Okay, actually note Bharti, that's the biggest Nifty fall today, Anuj, down what, 6.5%? Just pick up Bharti Airtel for you. Look at that big fall in the last 10 minutes or so. If you drew the rupee chart, you would see the rupee, the dollar rise. The rupee chart looks inverted because you are actually plotting the dollar. Almost from that moment when the dollar was rising, you saw Bharti capitulating, and that is the umbilical relation between rupee and Bharti. Lots of dollar debt, so as the rupee depreciates, big trouble. Rima put out a note early in the morning. Their FY13 US dollar denominated loans accounted for 66% of their gross debt. It was 70% in FY12, but now 66% as of FY13. And I think the gross debt itself is fairly huge at 73,000 crores. So, you know, you're talking about 70% of 73,000 crores. It's a big debt. And as the rupee depreciates, you're going to see pain. Now you think of the banks. What is Bharti? Ultimately, when you come right down to it, are best of AAAs. And in a sector where actually consumption is growing, you know, irrespective of all the policy bottlenecks you have, it's one of our best consumed sectors where perhaps competitive undercutting is now over. In spite of all that, this is the problem that Bharti finds itself in. Then what do we have to talk about the other AAAs?
And you know what, Bharti is a stock which, you know, all of a sudden some people are again getting back to be bullish on.
Why?
You know,
their foreign investor, the FDI money came in over there.
Exactly. You know, just when, you know, you think that it's turned the corner, you know, stocks like Idea, you started to see some call tariffs go up and as well. But this is market for you right now. Nothing is safe haven.
And actually, as you pointed out, maybe the 10-year also we need to pull up. The 10-year also is likely to breach the 9% mark anytime soon. Anuj was pointing out it was 8.99 when he saw. So there you are, another 0.065 to go, and you will be at 9%. Well, all the bonds, you know, 9-year, 8-year and 11-year, 12-year are already at 9%. Exactly. This is sacred cow because a lot of people want to hold this liquid bond since it is benchmark and that one as well is capitulating. The impact on stock markets is obviously for all to see. 324 down, and now we have breached the morning low of 5409, now at 5406, and really that's not the place where the carnage is maximum. It is in the Nifty Junior. That index is down 2.6% at this point in time. Just to point out the big names that have lost, we already told you about Bank of Baroda, 8.25% down, Adani 7.5% down, Bharti Airtel, we've been speaking about it, 6.5% lower, MMFL, the NBFCs would be of course worst affected. When you see government borrowing 10-year at 9%, what is to say about an NBFC company which borrows from the market, from the wholesale market, down 6.3%. And then the big boys who have so far been the shelter of funds, Lupin down 6%, Sun Pharma down 5%, the list goes on. It's just getting worse.
And I think this list will bury people now. You know, forget about you know, the other ones, you know, the Yes Banks of the world, or maybe the you know, the Syntex.
You'll worry about the Lupins and the Godrej consumers.
Exactly. You'll worry about the HCL Techs of the world. You'll worry about you know, the stocks that I mentioned. The Nifty stocks which have actually gained 40 to 50%. You know, that's important to keep at back of your mind. And these are the set of stocks that you'll get to be a bit worried about now.
Okay, as the 10 years stands poised to breach 8.99 into 9, the Nifty stands poised to breach 5,400 as well. Yes. 5402 while you were talking, Anuj. Okay, someone is as worried as we are, and it's been pulling back to 5405 at this point in time, but came within a whisker of breaching even the 5,400 mark.
And it will be more than a 12-month low on the Nifty once it goes below that. I think I mean, we'll just work the numbers. I think it was 5390 or 5395. If you go below that, then you're talking about a 52-week low on the index. Yeah. The yield has hit 9%, by the way, Lata.
Okay, this is really cruel because that throws banking calculations into such a tizzy, and with nothing on the anvil to expect that by September that MSF rate of 10.25 and the liquidity squeeze that the RBI will not give anything more than 37,000 crores in the lap. You know, the two policies which have really squeezed all liquidity out of the market. I mean, there are no signs that these two policies are going to be reversed. People will now start working in the calculations of MTM losses on the banks. At the moment, these loss calculations were tentative, that we don't know what will happen. But now September 30 is not all that far away. So fears will rise that we are going to see MTM losses. There is a request pending from the banks with the Reserve Bank that at least the MTM losses should not be calculated, because for all intents, this is a policy that will be reversed once the rupee stabilizes. But the Reserve Bank has not given such munificence. It doesn't like these kinds of forbearance. It wants the poison to always show on the PNL.
And that's the point Bharat Iyer was making, that 30% of your index is banks. If banks shows these kind of mark-to-market losses, forget about even 7% earnings growth. You should be worried about if you can have earnings degrowth. That's also one expert pointed out. So really looking quite scary. Maybe we want to get Nischal in on this conversation. Nischal, in terms of banking names, I mean, though they've already capitulated so much, but at these levels, would they still be short?
See, if the market has to fall from whatever it is, 5,400 to 5,200, 5,100, it will be still largely led by the banks. Because as you were saying just now, 30% of the Nifty is banks, and that's where the last safe haven is there, basically, besides your pharma and the consumption stocks are concerned. Now, for pharma and consumption, at least the outlook doesn't seem to be bad. So I think those stocks will still remain the safe haven, and the banks which are holding on despite the economy going the other way, I think that's where the pressure will continue.
Nischal, have you all started advising that people should even take money where the falls have not been so big, as Anuj was pointing out, in the HCL Techs and the FMCGs and the Lupins and Sons of the world, because inevitably you may see selling over there. Are you all advising people to even move out of those stocks?
See, Lata, to be frank, basically, if you do not need to be in India, basically for the moment, and do not need to be invested into equities, I don't see any reason for you to hold on to any equities. So until unless you are saying that you have got an India dedicated fund and you need to be in India, then I think these are the safe havens which one should be in. Having said that, I think IT is one sector basically which we have been telling people to actually go out and buy, given that 1 rupee is in your favor and the US demand is pretty strong. So whether you are after the last quarter results and subsequently are talking to the various companies, the demand just continues to be growing stronger. So I believe on an absolute basis also IT will outperform, not only on a relative basis.
Fair enough. That will be some consolation, wouldn't it? Only place perhaps where money has not yet gotten eroded. Thanks, Nischal. Let's get a bond market veteran into the conversation.